Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
What's up, everybody? Welcome back. Got the hats rocking this week. I know we introduced them last week. Now we're wearing them and it's ready to rock. So just want to remind you, make sure you're staying till the end on these things because we do get an awesome loan program or a new loan idea at the end for you. So make sure you're staying till the end. We've got a really cool one this week. Jason, let's jump right in. I know we got some cool stuff to go ahead and let people know about. So let's talk about the Weekly Spark this week. So first up, obviously, we've kind of touched on this multiple times, but Fed rate cuts. What's the deal?
Yeah, what is the deal, right? So the Feds, they're concluding their 2-day meeting today, and we will get to hear from them this afternoon. But, everyone's basically saying that the Fed is not expected to cut rates. But it will be interesting to hear their thoughts on tariffs and inflation now that we've got a lot of trade deals that have been negotiated. But listen, we did get the ADP employment report today, and it did come in a bit stronger than expected. But Ryan, as we know, it's still a pretty weak level of job creations. I mean, the biggest area of weakness right now continues to be small business, which is really the backbone of this country, right? We added 10,000 jobs nationally, but businesses that have 20 to 49 employees, they shed 10,000 jobs. And also remember, last month's ADP report showed job creations of negative 33,000 jobs. So this is suggesting a slower and weaker economy. It's kind of like 3 steps forward, 2 steps back. And Fed Chairman Powell still holding on to not cutting rates. Powell, let's get with the program.
Yeah, definitely get with the program. All right, up next, we got refinance boom imminent. Let's do a chart deep dive this week, Jason, and I'll let you take it from here with the charts and show me what you got. So let's go ahead and remove this one, and we'll add this one, and we'll make it bigger. All right.
Awesome. All right, guys. So I wanted to get into the 10-year because, as you know, if you've been watching our content, as 10 years get stronger, rates get higher. And so if you go back to this all-time top back in October of 2023, we were pushing 5% on the 10-year. Not good for rates, right? But we did see this huge drop in December. And as we see this kind of bouncing back and forth, as you can see these moving averages, it's really telling how these charts, how it respects these moving averages. But here's what I want you guys to see, okay? So we talk about refinances and when this could be an opportunity to refinance. Realtors, don't worry, we're going to talk about buyers as well. But we want to see right around this 4% before we really start seeing a huge dip in interest rates. We'll probably see about a 0.5% interest rate drop once we get to 4. And I'm just going to show you guys here. Like, there were 3 opportunities going back to, let me just click that in here, going back to this, going into December right here, right? So we had about 2 months of low interest rates where we were able to lock in and help people save money on a refinance. Then it shot back up again. And as it trickled back down, we had another about 50 to 60 days here where we had a lower interest rate. And then thirdly, we see this last capitulation down here where it only lasted about 7 days, Ryan. I remember that we had a few people on the fence thinking about if they wanted to refinance, and then boom, they lost that opportunity. So realtors, let me show you what I'm seeing. I'm going to zoom in a little bit closer here. Forgive me for my chart work, guys. But okay, so this red line is the 200-day moving average, and we broke through this here, as you guys can see, and we went up and tested this 200-day again. Now, here's what we're looking for, guys. If we can hold beneath this 200-day moving average, we have the opportunity to start pushing down into those low rates. If we see this capitulate down to 4%, we'll see about a 0.5% interest rate lower. What does that mean? Well, according to some analysts, a 0.5 point drop will lead to about 2.5 million more buyers that will be able to qualify for a home loan. And a 1% drop would see about 5 million new buyers. So this is not only good for refinances, but I think we're going to see a lot of people be able to afford the house that they're looking for.
Yeah, that's awesome. I think, what do you say as far as the strategy goes for now? Because obviously it's not there yet. For real estate agents that kind of got buyers that are like, I'm priced out, I can't do anything. What do you recommend them to do in the meantime while we watch this 10-year kind of come back down a little bit? What would you say would be a good strategy for them?
Yeah, so that's a great question. So first of all, I would tell realtors, with the information you have, I would arm yourself with some basic knowledge on where the interest rate market is going. Now, what I always tell buyers when I approve them is, let's make sure that you budget based on the interest rate today. Because even though we have an opportunity to refinance in the future, we want to make sure they're not being strapped in a home that they're living paycheck to paycheck because their mortgage payment's too high. So I would say to realtors, arm yourself with this information. Let them know that we have a pretty good and stable interest rate environment right now, and we do have the opportunity to see some lower rates in the future.
Awesome. Yeah. And I always recommend, especially in these times, we're doing it with refinances with our past clients, touching base with your past clients, connect them with a mortgage broker that knows what's going on. Shameless plug, Creative First Mortgage. But make sure that you're getting with the people that know what's going on, because we can prepare them. I've got a couple buyers right now. We've got them in the process. They're ready to close as soon as we can find a rate that locks in that meets what they want. And right. So, you can become a hero a second time. You're already the hero on the first time, helping them get the house. Now you get to be a hero the second time by recommending they talk to somebody and may be able to save them some money. So always recommend that for your agents. It's just a touch point for you that can really lead to good things for you. So let's jump into number 3 here. And this is the exciting one as well. We've got the loan spotlight of the week. And last week we talked about blended income types. This week we're talking about blended credit scores. Jason, what do you got as far as opportunities, or what does this even mean?
So realtors, this is an amazing opportunity to get people approved that otherwise wouldn't be able to get approved. So let's say that you've got a borrower that has a 580 credit score, but makes a significant amount of money and it's needed to get them qualified. And then you got your other borrower at a 680 credit score. Well, what we're able to do is take the average of both credit scores. Now, again, this is a broker loan only. So you want to work with an independent broker that can do this. And we can actually use the average of the 2 scores. What does that do? Well, it allows us to give you a better interest rate, because remember, credit score and interest rate go hand in hand, and then use that to close using both incomes that we need. So it's an exciting program, and I think it's going to help a lot of realtors and buyers out there.
Yeah, it's pretty awesome too, because once you get into those lower credit scores, you kind of get pigeonholed into, one loan type, right? FHA tends to be the case. But if you got a buyer that's got, a little bit extra money and it doesn't make sense for them to go in an FHA loan, but they've got a lower credit score, get them into a conventional loan and it works out for the better for them. So I think it's a great opportunity. So since we did the deep dive into the charts, Jason, I think we wrap it up here and we send it into next week, and hope you have a great weekend, and we'll see you on the next one.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.